Everyone, happy Monday. This is the first full week of trading here for 2026. The big question at hand was, of course, oil due to the previous escalations over the weekend with the US and Venezuela. Oil really ended the day not too crazy here. Most people expected lots of volatility. That wasn't the case. In fact, if you look at the VIX here, still pretty low here. If you just zoom out here on the daily time frame, going back to the chart on oil, the big question at hand is what's going to happen if it pops above this, bearish trend line here. It didn't. It actually ended the day somewhat green here, but staying relatively flat. I did address both sides of the coin. What could happen if oil goes up, oil goes down. Very briefly, markets, if there's geopolitical tension that escalates, let's say with the allies of Venezuela, so for example, Iran, Russia, China, then you will get a little bit of a pop on oil, just pricing in any supply shocks, things of that nature. But that didn't happen. Of course, escalations so far haven't really gone up so much. And the reality of this recent news is there's going to be more supply of oil. Now, right now, Venezuela doesn't have the best infrastructure, so it's going to take some time for these U.S. companies to come in, extract the oil and start selling it. But even when they do get to that end result goal of theirs, more supply of oil tends to bring the prices down. So if anything, we do go ahead and see oil stay subdued for some time. That's going to, of course, help the inflation story in the US. Less inflation does result into more rate cuts. On my previous video, for those that didn't watch it on Sunday, I did go ahead and look at the 10-year yield, and I did see and kind of pointed out how we were staying pretty elevated here. We got up to this 4.2. And what I basically said was that the bond market's not really in agreement with this rate cut narrative. Well, I was actually proven wrong. So my thought process was if 10-year yield stays higher and breaks above here, then bond market's not really in agreement with the Fed rate cut story. And that would have been the case. However, oil didn't really make any big movements. In fact, more supply of oil does bring inflation down in the US. And so the 10-year yield did reflect that. So now we are trading lower here. The dollar originally was trading higher today, and then it ended in the red. We had some pretty interesting price action. One thing I did mention here on the DXY yesterday, what happens if we get a breakout? I did say that any hits up into these retracements levels is 38.2, the 50, and the 61.8 could be met by long-term bearish traders here as they get an opportunity to go short longer term. And so we hit this 38.2% retracement, faded back lower back into this level here. So if there is some continuation on that, we can expect the dollar to continue to go lower. And if that does happen, then you will definitely see equities chug higher on that rate cut narrative and a lower dollar just because of that inverse relationship. So S&P 500 traded higher on the day, and now we're back up into these levels close to the all-time highs. NASDAQ, pretty interesting here, still kind of trading somewhat lower, creating lower highs. I'm interested to see if that's like a bigger thing unfolding. I will definitely keep an eye on to that. Tech, the story behind this tech is overvaluation, overspending, and not living up to that hype. So we'll see how that unfolds. Dow Jones here creating new all-time highs today, which is really, really good. These are smaller companies here, so definitely loving the rate cut narrative. Something to watch on the dollar. So we did start this week off pretty strong with some headlines here. We're gonna have more to come. We do have a plethora of job data here coming in for the US towards the end of the week. So we have ADP, JOLTS, NFP. And so I'll go ahead and summarize the implications of the print here, very surface level. If you get good jobs growth, the Fed can hold for longer and address their inflation that is above target. I believe right now it's at 2.7%. In fact, let me go ahead and fact check here. Yeah, CPI in the US 2.7. So still above the Fed's target of 2%. If we do get a hint of good jobs data turning for the better here, then the Fed will most likely continue with their stance of only 2 rate cuts for 2026. And so that may give a little bit of a boost for the dollar. However, if we do see some deterioration in the job market, then the Fed will most likely go ahead and address that by maybe adding another rate cut onto the table for 2026, or perhaps just bumping one of those 25 basis points to a 50. We'll see how that plays out there. So that's basically what could happen with the jobs data. We do have services PMI as well later in the week. We did get ISM manufacturing PMI miss earlier this morning, which is the only thing I could really associate with that downtrend in the dollar for today. But a lot of the countries across the sea here Up in the east, we do have their PMI, services and manufacturing PMIs, and also CPIs there. But like I said earlier, we do have JOLTS, ISM services for the US. We also do have a Swiss CPI, which is going to be important, jobless claims in the US, and of course our ADP, non-farm, and unemployment rate. So really big week setting up here towards the end. Curious to see how it plays out. That Aussie dollar play that I was looking to get into, we were seeing that the counterparts to the dollar were trading lower very early in the morning, and then they just went ahead and flipped here. So I was actually getting quite excited when Aussie dollar was trading lower. I was like, man, maybe I can get an entry here, but we'll see how it plays out, right? Maybe we get a hint of jobs data that's looking pretty good. We get some short-term bid in the dollar, and then I can finally have an opportunity for that. So I'll be watching that as well. On the edge finder here, one thing that I am noticing, we are getting somewhat of a flip here. So I'm curious to see how that's going to continue to play out here. But we do see New Zealand dollar, Aussie dollar were super strong on top setups. Their score is now tapering off. Remember, anything above a 5 is bullish. Anything between 4 and 0, that's going to be neutral there. And we are seeing US dollar Swiss coming from a bearish reading now to a neutral. Same thing with dollar yen, somewhat neutral here. And we are seeing euro US dollar now getting into -3 territory. Dollar CAD is still very bearish, or not very bearish, but -5. So I'd like to see how these things continue to develop. If these things kind of continue to shift in that direction, then you will actually see these dollar crosses at the top and their counterparts here towards the bottom. A lot of that will be influenced. We'll get some more clarity after the week is done, and hopefully some more clear setups that we can actually take advantage of, because right now it's more of a patient game. That's it for today. We'll have some more clarity, more data going into Wednesday, and definitely on Friday we'll definitely make a video after that going over what happened and if I did make any new trades. But for now, keeping it simple, being patient on those setups that I'm really looking forward to. And like always, happy Monday, guys. Have a blessed rest of your day. Trade safely. Bye-bye.